In light of the cumulative tightening of monetary policy and the lags with which monetary policy affects economic activity and inflation, the committee decided to raise interest rates by 50 basis points today, a step down from the 75 basis point pace seen over the previous 4 meetings. Of course, 50 basis points is still a historically large increase, and we still have some ways to go. As shown in the SEP, the median projection for the appropriate level of the federal funds rate is 5.1% at the end of next year.
What is up, guys? Welcome back to the channel. So today is December 14th, which means we got the Federal Reserve update, and they have gone with a 50 basis point hike. And this is what people were hoping for. But if you look at the charts, you'll see that the S&P is plummeting right now. Oh, this is the 1 minute chart, but the reaction right now is quite negative. Bitcoin, wicked up and back down, and everyone's wondering, what the hell? We got the 50 basis points. We're supposed to be going to the moon. But the federal funds rate for the 2023 projection was actually revised upward to 5.1%. The terminal rate has now been revised up. So the Fed is actually showing us that, hey, we're going to go with reduced rate hike velocity, but actually we need to still hike rates even higher than we said before. So it is a mixed bag. What we're seeing here, this is reports coming out just now. Fed raises interest rates by half a point, 50 basis points, to the highest level in 15 years. So if you go down here, you can see that they're saying, along with the increase came an indication that officials expect to keep rates higher through next year with no reductions until 2024. Think about that. The expected terminal rate is where they basically made the revision. It was put up to 5.1% in today's report, according to the FOMC plot in individual members' expectations. So the expectation was that the terminal rate was going to be somewhere right below 5, I think, and now it's going over 5. And in theory, this can continue to be revised upward. It could go higher. And, the hopium type thought would be like, okay, maybe they can revise it down eventually. But this has been the trend with the Fed recently, is that they've been saying, they basically, all of their expectations are wrong. And I think that they're essentially misleading us to not freak us out so much. They're actually telling us incorrect information to sort of, ease us into this new environment. Right, so here we have the S&P 500 with the Fed funds rate layered on top of it. And so essentially what we're seeing right now is that the rates are going straight up. And we've been seeing, multiple 75 basis point hikes in a row. So essentially what we're seeing is that, yes, the Fed is going to slow down the pace of rate hikes. So going from 75, to, something slightly smaller, 50 basis points. But the terminal rate, guys, is being raised higher. It's actually going to be somewhere up here at about 5.1. So previously we thought it was going to be just below 5, somewhere around here, inching it up higher and higher. I mean, it could be that they even raise it more at some point, and then the rates are going to be slower. The velocity of rate hikes will be slower, but then they're going to be maintained up at higher levels. So, people are all talking about like a Fed pivot and all this stuff, but at the same time, they're saying that they're not going to be reducing rates next year. They're going to be maintaining them at high levels. They're going to be finding their terminal rate and then keeping it there. And only until maybe the end of next year or in 2024 is when we would actually get an actual pivot U-turn. And a lot of people think that that is the end-all be-all signal, that when the Fed pivots, we're off to the moon and we're good to go. But that is also not really always true. I mean, actually, it's the reverse. This chart here from Cryptowatch, I'm sure some of you guys may have seen this already. He's showing us that the Fed pivots usually line up with major market pullbacks. So every time the Fed pivots, we're seeing 20, 30, 40, 50% drops in price. So it's really, it's not as straightforward as everyone wants to think it is. So now the market is seeing, okay, we're getting a reduction in velocity of rate hikes, though 50 basis points is still substantial, and they're raising the terminal rate. So, I mean, it kind of cancels itself out. It's like, it almost just makes it a non-important news day. It's like, okay, we're reducing rate hike velocity, but it's still going to be higher than expected. I mean, you know, it's really a nothing burger in a way. It's kind of like we're going to keep going the same path that we've been going. I mean, if you really take it into perspective what they're saying, I think that it's not that big of a deal anymore that they're going with 50. So we'll see. We're at a major resistance here for the S&P, and if this news is seen as bearish news, maybe we do see one final dip in the markets going into next year. A lot of people are expecting a recession next year, a continued pullback in the markets overall. What we're seeing right now for Bitcoin on the 4 hour is that people were getting really excited going into this. 50 basis points, it's guaranteed. And then the Fed does a little bit of a fake out and they're like, yeah, but 5.1%. So, I mean, that's kind of interesting. Something else that I find interesting is that Bitcoin is now sitting in one of the longest bearish parabolic stop in reverse trends it's seen in many years. Almost ever. I mean, there's rarely is it ever last this long, this dotted line here. And this has been a really key indicator for signaling trend shifts. I was kind of hoping that today we would pump up on this news and we would see that parabolic stop and reverse flip to the bullish side, and then we would start trending up towards the resistance. But we'll see. I mean, maybe we won't, right? Maybe we just found a top on this little uptrend we've been on, and actually we might see some pullbacks here, because in order for the S&P to break through this range and just start pumping up and create a major trend shift, I mean, that requires some major confidence. If the Fed had said 50 basis points today and the terminal rate is still below 5, something that was expected, like 4.8, we might have seen a lot more bullish moves today. But if they're just going to tell us, hey, we're actually going to keep raising it even higher than expected, I mean, it doesn't really mean much anymore, 50 basis points, whatever. So we'll see. We're on a major resistance for the S&P, and more than likely, I think we get rejected here, if I was to just take a guess. And that's, of course, not going to be good for crypto. But there's also other news, some more positive news to talk about, and that is that the CFTC, the Commodities Future Trading Commission, declares that Ethereum is a commodity again. So they are standing firm on their stance that Ethereum is a commodity. Gary Gensler, the chairman of the SEC, has previously stated that Ethereum was a security after its ICO, but he's making the argument that it has become more decentralized and turned into more of a commodity since then. So even the chairman of the SEC is suggesting that he's starting to agree with the idea that Ethereum is a commodity, and the CFTC is standing firm on their stance that it is a commodity. But of course, the whole proof of stake aspect might be an issue when you're trying to argue that Ethereum is a commodity and you know, providing dividend returns, something like a security. It's going to be maybe difficult to make the argument, but I'm kind of optimistic that this will be declared, Ethereum will be declared as a commodity in the end. I'm at least hoping for it. I'm making this video just before Jerome Powell is actually going to speak, but we did get the future, the summary of the economic report from the Fed already, which is what we've been talking about. And Bitcoin on the 4 hour is seeing some rejection here. I mean, that's a pretty clear 4 hour rejection, I would say. And this could mean that just like all these other times where we see these uptrends, we reverse down, uptrends reverse down. I mean, it's possible now that Bitcoin may be basically ready to do something similar. As much as I hate to say it, the S&P is really going to be driving that. If the S&P can get a major trend shift, which I currently don't see the reason why it would with today's news. So if the S&P ends up getting rejection, Bitcoin will likely drop again. But that's it for me today, guys. Hope you enjoyed this video. Smash the like, subscribe to this channel. Also, my Patreon has a major discount, 70% off, bear market discount, and it's only $15 a month. You can get in and join our VIP Discord chat. I'll see you guys in the next video.